Hello there, this is the Bookkeeping Master on YouTube. Welcome to this brand new series, Depreciation Explained. I will be covering all of the basics of depreciation. It's going to be fantastic. I hope you are super excited because I am. This is a free course. You can take the course on my website, freebookkeepingaccounting.com, or you can just stay here on YouTube and watch the videos on YouTube. In this first video, I am going to cover the basics of depreciation, what depreciation is, why we need to depreciate assets. I'm also going to give an overview of this course, which is this current slide. So throughout this course, you are going to learn many things, such as the basics of depreciation, depreciation methods, that is more specifically straight line depreciation and reducing balance depreciation. They are the two most common methods, the two most accepted methods to depreciate assets. If those terms don't mean anything to you yet, don't worry, I will explain everything. I'll go through the depreciation journal, how to account for depreciation in the financial accounts, accumulated depreciation, the fixed asset register, and also disposing of assets. This course is much more extensive than my usual courses. This is my new style. I have brand new slides and I plan on creating much more extensive courses from now on. The courses will still be basic, they'll cover the basics, but I'll be covering a lot more bases and answering a lot more questions. There'll be a lot more material, more meat in the course. All I ask is for a thumbs up and a comment below saying thank you for the course or something like that. If you are not following this course on my website, I suggest you do, because there's a lot more material on my website. But obviously you're welcome to stay here on YouTube and watch these videos on YouTube. Okay, so what is depreciation? What is it? If you think you know what it is, pause the video, write down your answer. What is depreciation? Your answer should be something like this. Depreciation is the process by which an asset loses value over time. Now let me break that down by giving you an example. If I go and buy a brand new car tomorrow, the car of my dreams, if I go and buy that tomorrow and pay X amount for this vehicle, will it be worth the same in a year's time? Likely, it won't be. Will it be worth the same in 5 years' time? In 10 years' time? No. The asset, the vehicle, will lose its value over time. This is sometimes called wear and tear. Because of wear and tear, assets decrease in value over time. Now, why is it important that we use depreciation in accounting? Well, assets show on the financial statements of a business, company, or other entity. Things like motor vehicles, machinery, tools, equipment. These are all assets that show on the balance sheets. They show as assets, items owned by the business, company, or other entity. And it's important that those assets, the value of those assets, are a true reflection of their worth. Or in other words, they are shown in fair value. So the value of the assets on the balance sheet are actually approximately what the assets are worth. Otherwise, you could have some assets showing on a balance sheet, showing on financial statements of a business, and the statements are stating that these assets are worth £80,000 or €80,000, $80,000, but they could actually be worth 8,000. That's a big difference. So we have to show the fair value, the realistic value, and these assets will likely depreciate over time. Hence why we use depreciation in accounting to show the fair value. There are other reasons why assets are depreciated in accounting, such as spreading the cost. So the cost of the asset can be spread through depreciation, and that will make more sense as this series goes on. There can also be tax reasons. Depending on where you are in your tax authority, there can be tax advantages to depreciating assets, or it could be that it's required by your tax authority to depreciate assets. So they are a few of the main reasons why assets are depreciated. Now, which assets are depreciated? Generally, they are the tangible assets. And what do I mean by tangible? Tangible assets are assets that can be touched and physically shown to somebody, whereas intangible assets generally can't be physically touched or shown to somebody. So which assets are depreciated? Things like motor vehicles, office equipment, computer equipment, tools. We could add machinery to this list. Which assets aren't depreciated? Assets like cash, stock, property. Property usually actually appreciates in value over time. The value goes up, not down. But that's for another course. So that's the basics of depreciation, what depreciation is, why it's needed, and which assets are depreciated. This course will go into a lot more detail and build on these basics as these videos go on. Like I said, feel free to follow along on my website. There's a lot more material, there's a lot more meat on the website. Just go to freebookkeepingaccounting.com, click on the free courses, there's loads of them, find the depreciation course, and you'll be able to follow along. Please like, please subscribe. I'll speak to you in the next video. Thank you so much for watching.